Hello and welcome back to episode number 7, I believe, of the Commute. I'm coming back at you from my basement, and this time I'm using the microphone. Finally found it. Just a quick little update. I have decided to switch careers. I've accepted a job offer starting in a week at a new dealership doing a new role. I will be assisting in a sales capacity as well as a consulting capacity. So I'll be kind of a jack of all trades for this new dealership chain that I'm going to work for. There will be some more info on that once I start the job and get rolling with it. But yeah, so some exciting opportunities coming up here soon. Today's episode, I wanted to talk a little bit about taxes. I think I've touched a little bit on it before, but I kind of wanted to get. Sorry, let me put this on here. Probably should have started that before the video, but I wanted to talk about, your deductions and ways you can save yourself money on taxes, ways that you can kind of either get a bigger return or owe a little bit less, because, the idea is you kind of want to break even. You don't, having a high refund isn't necessarily a good thing as a lot of people think it is. In essence, when you get a big tax return, all that means is that you've given the government an interest-free loan over the course of the year. So, say your tax return is $5,000. That means you left $5,000 of your own money on the table for the federal government to use without paying you interest, right? Because every time you borrow money from a bank or anybody, unless you have a super cool family member that'll give you an interest-free loan, right? Generally, you have to pay interest on that loan. You get a mortgage, you buy a car, whatever, you finance a washer or dryer, you finance an appliance or something like that. You always have to pay an APR, an annual percentage rate. Depending on what you get, it's either super high or super low. Mortgages are generally lower, car loans may be a little bit higher, unsecured loans are a lot higher, like a consolidation loan or credit card debt, that kind of stuff. So, in essence, you're loaning your money out like a bank loans you money, except you're not making money on your money. You're actually losing it because when you get it back at the end of the year, it's worth less than it was when the government, took it from you on loan. That's kind of what I want to talk about is getting the most out of your taxes, deducting the most, reducing the amount of taxable income you have total. 1099, if you're a 1099 worker, that can really help. You always have to pull a percentage because, as we know, a W-2 job, let me explain the difference between a W-2 and a 1099 if you don't know. A W-2, all that is the employer withholds your taxes for you and then pays them on your behalf at the end of the year, right? As a 1099 employee, you're what's considered an independent contractor. Therefore, your money is all paid directly to you without taxes being withheld. What does that mean? That means at the end of the year, you're responsible for that tax burden. So it's smart practice to pull your tax burden from each check. So I think the average right now is 15% for 1099 people. Depending on your situation, it ranges anywhere from, I think, 15 to 25%, the amount you got to, pull. So we'll just go high to make it easy, and we'll say 25%, right? So for every $100 you make as a 1099 employee, it's a good idea to put back about $25, right? And a lot of people kind of shy away from those 1099 jobs. I don't even work a 1099 job. I work a W-2 job, full disclosure there. But this was an idea, when I was looking at some of the opportunities that I had, I was considering taking a 1099 position, and being the kind of person that I am that does a lot of independent work, I always do have to fill out a 1099 at the end of the year, whether it's for rideshare driving, delivery driving, excuse my sump pump, I'm in my basement, that kind of stuff. And what I try to do is when you make money like that, it makes every dollar that you spend to make the 1099 money is now deductible, right? So any mileage you drive, gas you burn, vehicle expenses for maintenance to get there, the wear and tear on your car, if you're buying lunch for a client, all those kinds of things. And there's little apps you can download to keep track of it. It's a good idea to I keep a notepad because I'm kind of old-fashioned in that way, as I like to keep track of things on paper. I keep all my gas receipts and log the miles that I drive for business stuff and write it off at the end of the year. And then what ends up happening is you can actually get it, what I like to do is make it so my expenses always end up being more than what I make in 1099 money. Now, obviously, as we know, that's not exactly how it works, but making that 1099 money allows you to claim a lot more deductions, right? It gives you more freedom for the stuff you're allowed to claim. So you can get your taxable income a lot lower that way. But basically what I was saying is, for 1099 people, since your taxes aren't withheld, you can pull that, for every $100. So, like, let's say you make $1,000 a week, right? And you want to pull 25%. So you pull $250 a week and put that in an interest-bearing savings account, right? A high-yield savings. And you don't touch it. You let it sit for that year. It's nice and safe. It's in a savings account. It's not invested in stocks. And you can buy bonds with it, do whatever you see fit, right? But all that money that you're going to need to pay taxes, to use to pay taxes at the end of the year, you can gain interest on that over the year. So say you're putting that $250 in every week, right? I mean, obviously that's a pretty substantial amount of money, right? I think, if you do the math, I would need a calculator in my hand, but, 250 times 52 working weeks out of the year, it's a pretty significant amount of money once you break it down. I like I said, off the top of my head, I would need a calculator to do that. But that's a lot of money. So then you have all that money in that interest-bearing account. So all of that money is then now making you money, right? And at the end of the year, say your tax burden is only 20%. So that's an extra $50 a week plus the interest that you made on the $250, and you're ahead, right? That's basically your that's your tax return. It just comes in throughout the year. And the beauty of it is you can also, you can do what I like to say is borrowing against your taxes. So say you need that extra money that week and you can't afford to put the $250 back. Well, just know that your burden at the end of the year is going to be a little bit higher if you keep that money. But it gives you the freedom to use that right now instead of letting the employer hold it for you and give it to the government. And that's just the basic of what I'm talking about. As far as like 1099 money goes, if you make interest, that counts as 1099 money. And if you get a reward from like a bank, like a sign-on reward, like a $300 bonus for starting a new account, that's 1099 taxable income that you can use to then you can apply some expenses to that. It may not seem like you can, but you can. They don't really audit that stuff as closely as you might think. So there's ways around. Like for example, last year I made. Over the year, I very rarely drive for Uber. And now, I've been kicked off doing Uber because my car has now hit the age cutoff. So I can't even do passenger fares anymore, which kind of sucks. But that's not related to what we're talking about now. But last year, I made a total of probably about $800 driving for rideshare. But the beauty of it is I didn't have to pay taxes on that $800. Now, these are really small amounts. And the reason I was able to not pay taxes on that $800 was because the expenses that I was able to deduct because of making that money and all the mileage that I drove, I was able to deduct about, I think, $1,200 in expenses when it came to mileage, fuel, and wear and tear, because I wrote off any car parts that I bought too, as, because my cars are definitely a way for me to make income. So any kind of tax advantage I can use there, I use. And I encourage you to do the same thing. That definitely helped a lot. I was able to then pay taxes on, $1,200 less of my money. And that's basically all it is, right? When you reduce taxable income, you're just reducing the total amount of money that you have to pay taxes on, right? So there's a standard deduction for most people. I think it was about $12,000. I think it's a little bit more now, where it's like your first 0 to, I think now it's $18,000, you don't get taxed at all, right? And then from 18 to I think 40K or something in those lines, you get taxed a different percentage, and then so on and so forth. But you're only taxed that percentage based on the amount of money in that bracket. So you're never getting taxed on the first 18,000 or so that you make. I think, like I said, it used to be 12. I think it's a little bit more now. That's why a lot of like younger kids, like 16-year-olds that don't make a whole lot over the year, never have to actually pay. Well, and you don't have to pay as a minor anyway. But if you make less than that amount, you don't have to pay. So that's also something to take into consideration. You can make a lot more money than what it looks like on paper, but you can make it look like on paper that you spent more money than what you made, and then you don't have to pay taxes, which that sounds like tax evasion, but it's not. It's fully legal. You're allowed to do this. I've done it myself. I've done my research. I've done my own taxes since I was 16. I'm 24 now. Never paid anybody to do my taxes. I've been fine. There's been a couple of times where I've been audited by my state and had to pay them. That was totally unrelated, but I'm talking about on a federal level. when it comes to state stuff, your mileage may vary. So, take that with a grain of salt. That's kind of just the basis of what I wanted to talk about today. There's a lot more to it, and I would like to do an episode on tax brackets and how those work. If that's something that would interest you, let me know in the comments. I'm trying to keep the video size a little bit more digestible, so there's my little blurb of information for today. We're hitting about the 10-minute mark on recording, and there isn't a whole lot of fluff here to cut out, so I think I might just leave it as is. I am going to send this one up to Nick for polishing and, check it for audio stabilization, because the mic might make things sound a little bit funny. I hope you were able to hear me better. I hope you like what I had to say today. If you made it to the end, I appreciate you watching. It would mean a lot to me if you subscribed, engage with the videos in any way, leave a comment, a like, what you don't like, what you do, what you don't like, things I could do better, things I am doing great at, just any kind of feedback. Any feedback is good feedback. That's the way I view it. So yeah, again, thanks for watching. If you like the channel, you like the content, you like my face, go ahead and subscribe. Thanks.